What if I told you there was one man, one decision that could shake up the entire global economy? No, not this guy. The chairman of the Federal Reserve, Jerome Powell. In this video, we're going to break down what the Fed chair and Jerome Powell is, what these FOMC meetings, and how the Federal Reserve came to be. We're going to go over what they look for when deciding to raise or lower interest rates, and most importantly, what it could mean for you and your family. If you like this kind of content, go ahead, join the Freeman of Finance family, hit subscribe, hit that like button. Now let's get into it. Everyone is waiting on Papa Powell to turn the money printer back on, make it easier for you to buy a house and pump the markets. But before we understand why they are not lowering interest rates, we need to take a little history lesson on what the Federal Reserve is. The Federal Reserve, or the Fed, is the central bank of the United States. It was created in 1913 after a series of banking panics exposed how unstable and unregulated the financial system really was. So think of the Fed as a referee of the U.S. economy. It controls the money supply, oversees banks, and try to keep the economy running smoothly. Out of all of the weapons in the Fed's disposal, the best one in their tool belt is interest rates. This dictates what you buy a house at, what the bond market is at, and how cheap you could afford a vehicle. Before the Federal Reserve existed, the United States banking system was chaotic. Banks were privately owned, often undercapitalized, and there was no central authority to manage the money supply or intervene during a crisis. From the mid-1800s to the early 1900s, America faced frequent banking panics. Basically, financial stampedes where people rushed to pull their money out of banks, causing runs on the bank as they were afraid they would lose everything. Dozens of banks and trusted companies collapsed. The stock market collapsed. There was no one at the Federal Reserve to stop the bleeding. Instead, one man came to the rescue, and you might have heard of him before. J.P. Morgan organized a private bailout for the overall economy from a lot of very rich people at the time. That scare proved that the U.S. needed a central bank. So in 1913, Congress passed the Federal Reserve Act, creating the Federal Reserve System. Its job: prevent panics, provide financial stability, and give the country a flexible and reliable currency. The Federal Reserve Act in 1913 is the sole reason there is so much confidence in the US dollar. It is an entity that is not directly tied to the president, doesn't report to the president, yet it allowed the United States to become the world reserve currency. But when do they pull the number one tool out of their tool belt? Interest rates. What do they look for, and when do they decide to lower or raise interest rates? The Federal Reserve has a dual mandate and two things that they really care about the most. Number one is inflation. They want a target of 2% inflation year over year. Remember, inflation kills currencies. If you look at Venezuela and other countries that have had runaway inflation, it absolutely kills a currency and kills a country. The number two thing that the Federal Reserve looks for is max employment, and historically, a 4% nationwide unemployment is about the lowest levels that we have ever seen. So with all of this data, when is the Federal Reserve going to cut interest rates? Are they just being hard, wanting to stifle the man, telling them to cut interest rates, or are they really not cutting it for a reason? Well, let's look into the data. When we take a look, unemployment currently is 4.1%. You can see it's been very steady with a couple upticks ever since around 2017, 2014. In the 2008 recession, we got up to about 8.4 unemployment. If we go look at where inflation is currently at 2.4%. February was 2.8%. You could see going back the last few years, we haven't had one single month under 2%. So if you're the Federal Reserve Chair, Jerome Powell, you're looking at this saying inflation still is not to our target and employment is just where it needs to be. So there is zero reason to cut interest rates. Now, I know what we want. We want to be able to buy houses cheaper. You want to be able to buy your wife that new car for cheaper. Maybe you want the crypto and stock market to absolutely boom. But For interest rates to be cut, there has to be pain, and that pain normally comes in by unemployment, people losing their job. So the Fed cuts interest rates to entice businesses to borrow cheap money and hire people, put research and development, make investments into America. And whenever you raise interest rates, it's because the economy is too hot and you're wanting to cool it down, because a very hot economy where everyone's buying everything leads to inflation. So guys, if you like this kind of video of me giving a macro outlook on what the economic environment is and trying to educate on what the Federal Reserve is, what their main goal is, how they were established, and most importantly, when are they going to cut interest rates? Is it going to come at the next FOMC meeting? Guys, please leave me a comment down below. Let me know that you like it. Make sure you subscribe, join the Free Men of Finance family. Watch this video up above. I love you all.